Okay, welcome back. Godrej Consumer posted a weak set of second quarter earnings, weaker than what the street was expecting. The expectations were not that high to begin with. Volumes have contracted about 5% this quarter, and lower gross margin and higher ad spends have led to an EBITDA margin contraction across regions as well. Sameer Shah is Chief Financial Officer of the company. He's joining us right now to take some questions. Sameer, good to have you with us here. Thank you very much for your time. Tell us how the third quarter is panning out so far, and what's the outlook? Because as we've seen in Q2, there perhaps are business-specific issues, household insecticides, for example, and also the overall macro environment for some of these businesses is not all that conducive, as we've heard from other companies as well. So how are things going to pan out from here out, volume-wise and pricing-wise?
Good morning, Prashant, and thanks for having me on the show. I think if we analyze the Q2 results first, in India to begin with, we had poor household insecticide categories performance. And one of the hypotheses which we had during the quarter, at the end of the quarter, was because of delayed monsoon. And that hypothesis has actually been correct. That's because we have seen, with pickup in monsoon in some of the key states, October and even November as we speak, relatively, better. Secondly, in Indonesia also we had a very high hygiene comparator, which is one of the last quarters now of a very high hygiene base, and that also sort of goes away in the coming quarters. So driven by this household insecticides, kind of recovery, at least in October and mid-November, as well as us not having a high hygiene comparator in Indonesia, we do expect volumes recovery in rest of the year, both in Q3 as well as Q4 going ahead.
Okay. Sameer, hi, good morning and thanks for joining in. Although you do expect a volume recovery, do you think it would be tough to meet your double-digit revenue guidance that you had called out for earlier, given what you've done in the first half?
Good morning, Sonia. I think if you look at our H1 USG, which is the sales value growth, it's hovering around, high single digits. So we still remain quite confident of delivering a double-digit value growth for FY23.
All right. Hi, Sameer. Morning. With regard to your raw material cost, how much is the cooling off from the top, if you could give us a sense? And what kind of a gross margin recovery can we look at for the second half of the year?
Hi, Nigel. So the gross margins have, kind of been sequentially improving, as well as if you look at Q2, the year-over-year drop in gross margins was close to around 200 basis points compared to around 500, 600 basis points drop, which we had in first quarter of the year. With palm oil prices cooling down, with crude oil also, coming down, we do expect a meaningful recovery in gross margins. In fact, we expect our gross margins to go back to the normative level of gross margins, which is basically period of FY20 and FY21. So we will see gross margins recovery going ahead, and there will be also carry forward pricing impact. Price increases which we have taken over last 2-3 quarters is something which will, sort of continue for maybe a couple of quarters more going ahead.
Sameer, one of the other things we highlighted was ad spends, which were up some 300 basis points year on year. Where will that settle at, and what are we seeing so far in Q3?
There is no specific level, Prashant, in terms of target, ad spends. At the end of the day, what really matters is the return on marketing investments. Wherever we see return on marketing investments, we will continue to invest for growth. Typically for HPC space within FMCG, one would see a range of anywhere between 10 to 12% of ad spends as a percentage of sales. And we are relatively on the lower end of the band. But having said that, we will continue to invest for growth. So we do believe there are multiple categories in our portfolio locally as well as globally where we can drive category development penetration, which will need marketing investments.
You did mention that you will retain your double-digit value growth guidance for FY23. Can you help us understand where will this growth come from in terms of different verticals? Are you looking at a bigger move in personal care, home care? What are the growth triggers for the second half of the year?
I think it will geographically come in, Sonia, from India and Africa. In fact, if you look at Africa to begin with, consistently it has been growing in mid-teens range over last 5 to 6 quarters. We expect that trend to continue going ahead. India should also see, at least a double-digit value growth if all goes well, even better than double-digit value growth. Indonesia, as I mentioned earlier, will see a gradual recovery, but the performance will be better than what it has been at least in the last 2 quarters. So we expect growth to be directionally broad-based, but at least in second half of the year led by India and Africa.
Okay, all right. Sameer, what about the Africa business? The margins, that's really got pulled back to a large extent. When do we see a recovery out there, and what should be the steady state margins we look at in the African business?
So in terms of ambition, Nigel, we have shared that we want to be close to mid-teens margins over a period of next 2 to 3 years. So we believe we are very much on track on that front. If we just double click into last quarter, I think the overall drop was part driven by commodity inflation, including currency depreciation in some of these markets, and part was driven by the upfront marketing investments.
Okay, Sameer, we'll leave it at that. Thanks a lot for joining in and all the best. That's Godrej Consumer stating that they're expecting a significant recovery in gross margins to levels seen in 2021, and they're also looking at a double-digit value growth in the second half of the year. Just a quick comment on the market. The mid-cap index is the one that's struggling a bit this morning. So it's down, it's actually flat, but there's plenty happening beneath the surface. We were telling you about how stocks like MRF are under pressure. Jubilant Foods, by the way, is seeing a big knock now, almost a 6% knockdown on that stock. The numbers were largely in line. There was nothing major to, nothing alarming, but I guess the market is now in a bit of a profit-taking mode as well. So keep an eye out on that. Piramal Pharma, which had a big run over the last many days, is also coming in for some profit-taking. So is Tata Motors DVR. So it's smelling of profit-taking in the market. And on the upside, it's PI Industries, which is really your big mover right now. 8% higher on PI Industries. And we were telling you about how it's been a very strong set of numbers coming in there. So high point of trade for that particular stock.
Sonia, I think C8 reported numbers earlier, right? I mean,
Yes.
I think C8 numbers, but from what I remember, C8 had reported an expansion in margins. So this is interesting, and I guess we can kind of dive in into this in detail. But I guess with what MRF has reported, C8 is also taking a bit of a sort of profit booking. That is what we're seeing, broad action. But I think this quarter, at least year on year, margins for C8 went up and margins for MRF are down sharply.
In fact, gross margins, actually,
Yeah.
it's a tale of two cities over there. The gross margins for MRF went down almost 600 basis points year on year, while CEAT actually saw an up move. Now, it's also about which companies decide to take how much price hikes to pass on the raw material costs, because quarter on quarter raw material costs have gone up about 5 to 10%. So I guess, it depends on your market share and how much power you have to pass on costs.
Years ago, MRF used to be the absolute gold standard in terms of profitability, right? I mean, almost, I think, double-digit margins, etc. They've come down a long, long way. So at about, I mean, the stock is kind of reacting very vigorously to these set of numbers as well. But I think autos is what we stick with, Sonia. Bosch.
Well, we have Bosch. Once again over there, the revenue growth has been good, but it's margin pressure.